Good morning, friends. Welcome to SBI Securities Morning Podcast. In today's podcast, we will be discussing what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We'll also be discussing on the key sectors and stocks that we should be focusing for the day and the next few trading session. In trade yesterday, post a positive opening closer towards levels of 22,750. Minor profit booking from higher levels was visible in Nifty, leading to led by selling pressure in stocks such as Reliance and heavyweight IT counters. Bank Nifty witnessed a continuation of the positive momentum visible since the past week, with strong momentum visible in ICICI Bank yesterday and HDFC Bank consolidating closer towards its resistance zone of 200 DMA, that is 1560. So this led to Bank Nifty closing at a fresh all-time high. Sectorial indices such as realty, metal, auto, financial services, infra and banking are displaying superior relative strength, where we expect momentum to continue, while IT, media and FMCG are expected to continue their underperformance going ahead. Coming to the macro factors, the dollar index is currently stable around 104.15, and that is a short-term positive for us. The US 10-year yields too have been trading around elevated levels of 4.4% since the past few sessions, and Brent crude currently trading closer towards $91 a barrel. So that's a bit of a cause of worry. Brent crude trading closer towards 5 months high levels, as well as the USD INR at elevated levels. So that's a bit of a concern from us. Coming to the US CPI data scheduled tonight, that will be extremely crucial, as that would be a key determinant of the Fed policy action going forward. Softer inflation would mean Fed could start cutting interest soon, while a hot inflation number above 3.4% would mean Fed deferring its rate cut plan by a few more months until inflation is under acceptable levels. Coming to the Nifty levels, while the indices are in an overall uptrend, it is important to be cognizant of the fact that the election dates are now approaching closer, and with Brent crude oil prices steadily inching upwards warrants some bit of caution. Going forward, hence one should keep trailing their long position with the key support levels in mind. Strong support lies around 22,480, 22,500, which is the swing high of March 2024, and until this zone holds, the up move could extend towards levels of 22,830, 22,870 levels on the upside. Any sustainable move above the levels of 22,870 will lead to an extension of the rally towards 22,980, 23,030 in the short term. In case the index slips below 22,840, it will lead to further selling pressure in the index up to the levels of 22,350, 22,280 levels. Coming to the OI data for Nifty, so Nifty PCR is currently around 1.05 levels, implying strength in the indices. Meaningful call writing is witnessed across 22,700, 22,800 strike, while if you see it on the put side, it is mainly seen in 22,600 and 22,500 strike. The overall range for the coming few sessions could be 22,850 on the upside and 22,500 on the downside. Coming to Bank Nifty, with HDFC Bank, ICICI and IndusInd Bank displaying volatility, the sentiment has been quite buoyant for the bank index, and the texture has changed to buy on dips. Also, in the last 5 days, if you see, the index has witnessed the formation of a higher top, higher bottom chart structure. Till the index holds above its crucial support placed at 48,300, 48,400, which is the Jan 24 swing high, the current positive momentum could extend towards the levels of 49,100, 49,250 levels. While on the downside, if the index slips below the levels of 48,250, it will lead to further selling pressure in the index towards the levels of 47,800. If you look at the Bank Nifty PCR, it is currently above 1.15. Significant call writing, if you see, is visible in the 49,000 strike, and if you see it on the put side, it is visible in 48,600. So implying a broad range of 48,400 on the downside and 49,200 on the upside for the next few trading sessions. Coming towards the stocks and sectors in momentum, so stock specific, if we see, from the broader market, that is the likes of ICICI Bank, Apollo Hospital, Bajaj Finserv, BEL, AB Capital, Aisha Motors, Hindustan Copper, Nalco, Grasim, HAL, ICICI Lombard, Policy Bazaar, BML, Castrol, MCX, SAIL, Tata Power, Zomato. These are the counters which are looking good based on technical parameters, as well as if you see the relative strength chart of these counters, they are relatively outperforming at the current juncture. Coming to the FII DI data, in the cash market, that is FIs have been sellers. If you see right from the start of the current series, FIs have been net sellers in the cash market segment, and even in trade yesterday, if you see, they were sellers to the tune of 593 crores, while DIs countered them to an extent by purchasing 2257 crores. FI long short ratio for index futures, if you see, has steadily improved as the series has progressed and is currently at 51% on a net basis. This as they purchased 27,659 index futures. On the stock futures front, if you see, FIs have bought to the tune of 13,637 contracts, while on the options front, FIs bought 1,67,901 call contracts, and they simultaneously purchased 1,62,395 put option contracts. So friends, that's all for today. Thank you for regularly listening to our podcast and wishing you all an energetic day ahead. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.